Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the key US stock indices in our segment, as we have been doing for the past several weeks and months. This video is for educational purposes only, and it is not a financial advice. This one is going to be a short video because not much has changed in terms of the levels that we have been looking for resistance and support since the last video which we had done. So I'm going to focus a little bit more on the SP 500 E-mini futures. So what we are looking at is the daily chart of the SP 500 futures. Just to remind everyone, just a disclaimer, that this video is for educational purposes only, and it is not a financial advice. So guys, what we had been looking for is a level of 41.65 to around 41.72 or 71, where we had a conjunction of this ABCDs coming together, giving us a level of confluence, which means that perhaps there was a stronger resistance in this region. And also looking at the left hand side, we have the structural resistance here. So we have seen the market actually pull back over the course of last three trading days. And the interesting thing is that the market actually pulled back right into this 40.99 level, which is nothing more than a 38.2% Fibonacci retracement of this little ABCD that we have here, ABCD extended. So it's not, I've not drawn it here, but it's an extension of this, but the key level is right here. If we take a Fibonacci retracement from here, that's your 38.2% retracement. Now it's still possible that actually what we are looking at is also a kind of an ABCD two-legged correction, and we could actually see the index pull back right into the support zone of around 40.80 to 40.70, which we had identified in our previous video which we did. Now I'll just show you that if we just move to a 30-minute chart here, what we are looking at is last Friday, September, is a shorter trading day because of the Good Friday. If we just draw a retracement, what we see is that the price was right at the 61.8% Fibonacci retracement. So here we go, right here. So this Sunday night trading will tell us actually whether the market is strong enough to actually move towards 78.6% Fibonacci retracement, or we could see perhaps a pullback from the current levels. And what we are looking at in that case, if the price begins to pull back, if we draw a 1-to-1 projection, price projection, then what we see is, I'm just gonna change my tool a little bit. What we see is that the 1-to-1 projection will be something like this, and it comes right at the 40.72 level. So on the shorter time frame, we can see that this correction can play out in this ABCD formation right to the 40.70 level, which then should, in conjunction with the support which we had identified on the daily chart, 38.2% Fibonacci retracement, should give us a pretty good support level, and the market could just jump off that. If the market breaks this to the downside, so we'll be looking at 2 consecutive daily closes below this level. This means that something has changed, and this resistance level of 41.70 is perhaps a much stronger resistance level, and it could open up the price moving to the lower levels. But we'll take one thing at a time, and for now this is what we are watching. Let's take a look at the Qs, the NQs. Alright guys, so here the market reached this level of 13,275, which we had been looking for quite some time, and it has had a pullback, and it went right into this structural support here. There's also some Fibonacci support just from here. I've not drawn it. There's still possibility if the ES is gonna pull back, then it could actually pull back right into 12,740, where we have drawn this possible support region. And that's also the 38.2% Fibonacci retracement of this entire leg here, from here to here, if we draw it like this. Okay, let's take a look at the small caps, which is the Russell 2000. So here the Russell 2000 seems to have found support right at forming a from the 78.6% Fibonacci retracement. Our support level remains at 1750. As long as the price remains above that, there is a chance that perhaps it is moving in an A, B, C, D formation right into this resistance zone. The key level for us is the 1852, which is the 61.8% Fibonacci retracement of this entire leg here, this one, right, this one. And if the price begins to move above this, then that's a fairly positive development for the small caps. But for now, it's just moving in a trading range. Let's take a look at the Dow Jones Industrial YM. So here the price has moved back into the trading range right at the 61.8% Fibonacci retracement of this entire leg. So 0.1, 0.2. And here it has found resistance. It hasn't moved much lower here, but it's just gone into a sideways trading range. But what is important is that for this index to move higher, it needs to break convincingly onto consecutive daily closes. And closing base is 33,930 level, which is in the brown line here. And failure to do that, just do a quick support levels. The 38.2% Fibonacci retracement comes around 33,040, roughly 33,050 level. So that's gonna be a fair amount of points in terms of correction, but it also means it's gonna be kind of similar to what we think might be happening in the E-mini 500 ES 500 E-mini futures. So guys, this is what we're looking at in terms of the major indices, the levels that we are watching, the patterns that we are watching. If you like our videos and the analysis which we do, then please do subscribe to the channel. And if you found the video of educational value, the analysis, the technical analysis which we do is based on Fibonacci retracements and also pattern recognitions, such as the one-to-one projections, the APCD. And if you found it useful, then please do like the video. It just encourages me to keep on making new videos, because it's just an indication that the audience do find these videos good from an educational perspective. So thank you very much. Good luck and good trading.